Dealership lots across America are overflowing, but not because business is booming, because trucks are sitting, unsold, untouched, some for 3 months, some for 6. And right now, industry data points to roughly 1 million unsold trucks scattered across dealer lots nationwide, representing tens of billions of dollars in stranded inventory. The numbers are staggering, and what makes this story even harder to ignore is who's sitting on these trucks. Not fringe brands, not niche products. We're talking about models you've seen on every highway, in every parking lot, in every truck commercial for the last decade. So what happened? And why are dealers suddenly panicking about these specific models heading into 2026? The truck market is going through a silent correction, and it's happening faster than anyone predicted. Rising prices, higher interest rates, and shifting buyer priorities are colliding, or at exactly the wrong moment. Full-size pickup trucks now average over $66,000. Monthly payments that once seemed manageable have become deal breakers. Buyers are hesitating, walking away, waiting, and dealers, who financed all of this inventory with floor plan loans that charge interest every single day a truck doesn't sell, are feeling the pressure build. This isn't just about preference anymore. It's about perception, about fuel efficiency, long-term ownership costs, outdated technology, brand reliability, and a growing sense that some of these trucks simply aren't worth what they're asking. Today, we're counting down the 10 trucks that dealers are struggling to move in 2026, ranked from concerning all the way to outright alarming. And as we get closer to number 1, the reasons become impossible to ignore. Let's get into it. Number 10. The Nissan Frontier. On the surface, it looks fine. It's a mid-sized truck with a reasonable price point, a proven V6, and a reputation for durability. But fine is no. Longer enough. The Frontier has been sitting longer on lots in 2026, and dealers are already rolling out early incentives to move units, some going as deep as 10% below MSRP. The problem? The competition has lapped it. The Toyota Tacoma and Ford Ranger have both sharpened their tech packages and interior quality, leaving the Frontier feeling like it's playing catch-up. It's not a bad truck. It's just a truck that no longer stands out. In a segment that's gotten very competitive, very fast. Dealers aren't panicking yet. But the early incentives tell a story. Number 9. The GMC Sierra 1500. Now, hear us out before you push back. The Sierra is still a genuinely capable, well-built truck, but it's walked itself into premium territory, and the market is pushing back. High-end Sierra trims are now brushing up against luxury price points, and with the broader full-size segment averaging $66,000, buyers are doing the math and pausing. Is it really worth the extra cost over a comparably equipped Silverado? A lot of buyers are deciding the answer is no. Transactions are taking longer. Trade-in leverage has tightened. And with an all-new 2027 Sierra on the horizon, current model year buyers are thinking twice about committing to today's version. The lot times are growing. Dealers are noticing. Number 8. The Chevrolet Silverado 1500. This one surprises people, but the data doesn't lie. The Silverado 1500 saw a dip in year-over-year sales, even as its heavy-duty counterpart grew by 7%. And the reason isn't hard to find when you look at the interior. At a time when rivals are offering large touchscreen interfaces, seamless smartphone integration, and premium cabin materials across mid-level trims, many Silverado 1500 configurations still feel behind the curve. Customers who cross-shop and sit inside a Ram 1500 often walk back to the Silverado with questions. Dealers are reporting that the interior comparison is losing them deals. For a truck at this price point, the tech-to-cost ratio needs to make sense. And for a growing number of buyers in 2026, it doesn't. Number 7. The Ram 1500 Classic. This truck exists in an interesting place. It's cheaper than the standard Ram 1500 lineup, which sounds like a selling point. But buyers are increasingly asking, Why am I buying a truck based on a platform from 2009? The Ram Classic has aged out of relevance for many shoppers who walk in expecting modern safety tech, updated powertrains, and current infotainment. When fuel costs are rising and efficiency matters more than ever, a truck running older technology gets scrutinized. Dealers have reported customers walking away after one question about fuel economy. Once they find out the Classic delivers fewer miles per gallon than the current-gen alternatives, the conversation ends. It doesn't help that financing costs make even a cheaper truck feel expensive right now. Number 6. The Jeep Gladiator. Here's where reliability doubts start entering the picture. The Gladiator arrived with enormous hype. The only mid-sized truck with a Jeep badge and open-air capability. But the ownership experience has been mixed at best. Consumer complaint data and warranty trends have tracked issues that eroded early enthusiasm, and Stellantis as a brand has faced a rough patch in consumer trust heading into 2026. CarEdge data from March 2026 confirms the Gladiator as one of the slowest-selling trucks in America, sitting well past the 90-day threshold that dealers target for profitability. Dealers are being forced to have long reassurance conversations with buyers who've done their homework online. When a truck's reputation becomes an obstacle at the sales floor, that's a problem the sticker price alone can't fix. Number 5. The Honda Ridgeline. This truck doesn't know what it wants to be, and that identity crisis is costing it badly. Too refined for serious work truck buyers. Not prestigious enough for buyers looking at a lifestyle truck. The Ridgeline sits in an awkward middle ground. That confuses its target audience. Buyers who need payload and towing look elsewhere. Buyers who want luxury comfort go somewhere else too. And in a market where resale value has become a major factor in the buying decision, the Ridgeline's depreciation curve isn't doing it any favors. Add in a price point that's harder to justify. When buyers can find a loaded midsize with better real-world capability for similar money, and you've got a truck that's lost its lane. It doesn't know what it wants to be. And increasingly, neither do buyers. Number 4. The Chevrolet Silverado EV. When this truck was announced, the reaction was electric. No pun intended. Impressive towing specs. A familiar name. Big promises. But the reality of the market in 2026 has been sobering. The Silverado EV has been described by industry analysts as a truck that tows impressively, but faces a market that is not fully ready for it yet. EV tax credit changes have removed a key financial incentive that once made the math work for buyers. What's left is a truck priced significantly above comparable gas models, with real-world charging concerns that buyers in truck-heavy markets haven't resolved. Dealer inventory is lingering. The gap between the hype and the actual sales numbers has become uncomfortable, and for dealers holding floor plan loans on these units, that gap has a very real dollar figure attached to it. Number 3. The Ram 2500. Heavy-duty trucks are supposed to be the safe bet. High capability, loyal buyers, professional demand. But the Ram 2500 has been one of the most persistently slow-moving trucks in America, appearing repeatedly at the bottom of inventory turnover charts throughout 2025 and into 2026. CarEdge data flagged Stellantis trucks as occupying 4 of the bottom 10 spots month after month. The Rams. 2500's diesel configurations push prices well above $80,000 in many trims. And at that level, buyers expect flawless. What they're getting is hesitation. Warranty concerns, higher service costs, and a brand reputation that has taken hits across the Stellantis lineup are all feeding buyer skepticism. Incentives have been offered, and they're helping, but not enough. When discounts don't solve the problem, that signals something deeper than just pricing. If incentives don't work, what will? Number 2. The Ford F150 Lightning. This one hurts. Because the Lightning wasn't just a truck, it was supposed to be a statement, a turning point. Proof that America's best-selling vehicle could go electric and take the market with it. That's not what happened. In March 2026, the F-150 Lightning was confirmed as the single slowest selling truck in America by CarEdge data. Ford has already announced the fully electric version will be discontinued and replaced with a different electrified option. Think about that for a second. A truck that generated massive pre-order lists, that had buyers on wait lists for months, is now sitting on dealer lots, moving slower than almost anything else on the market. The reasons stack up fast. Expiration of federal EV incentives, high transaction prices, buyer concerns about charging infrastructure, uncertainty about long-term resale value. And now, the discontinuation announcement itself has made buyers even more hesitant. Why buy a truck the manufacturer is walking away from? Depreciation projections on the Lightning have shifted dramatically. Buyers who were once excited are now cautious, and dealers who stocked up on inventory are now holding units that are losing value faster than they can move them. This isn't a demand slowdown. This is a market rejection. In real time. Number 1. The Ram 1500. Here it is. The truck that was once Ram's crown jewel is now its biggest problem. The Ram 1500 has shown up on slow seller lists persistently through 2025 and into 2026. And the reasons cover every dimension that matters to today's buyer. Affordability, reliability perception, brand trust, inventory overload. Ram truck sales were down nearly 12% in the first quarter of 2025, and the trend hasn't reversed. Reports throughout 2026 have consistently shown Ram 1,500 inventory moving more slowly, especially at higher trim levels where prices push past what buyers are willing to finance. And here's the thing that makes this situation different from the others on this list. The Ram 1,500 isn't struggling because it's a bad truck. It's struggling because the entire context around it has collapsed. Stellantis, its parent company, has faced a cascade of challenges, leadership changes, production issues, consumer trust problems, spreading across its brands. When a buyer walks onto a Ram lot in 2026, they're not just evaluating the truck. They're evaluating the brand behind it. And increasingly, that evaluation isn't going well. Dealers are discounting, incentives are stacking, and inventory is still sitting. This isn't just slow sales. This is a warning sign. For a truck that once competed neck and neck with the F-150 for bestseller status in America, to land at the top of the worst performing list, that's not a rough quarter. That's a collapse of confidence. So what does all of this mean? It means the truck market, the most profitable, most reliable, most American segment in the entire automotive industry, is shifting. And it's shifting faster than manufacturers can react. Buyers in 2026 are different. They're more informed, more patient, more willing to walk away when the value equation doesn't add up. They're checking inventory data before they walk onto lots. They're looking up resale projections before they sign anything. And they're choosing to wait rather than overpay. For dealers, that means pressure unlike anything they've felt in years. For manufacturers, it means the strategies that worked in 2021 and 2022 simply don't apply anymore. The post-pandemic pricing power is gone, and the models that didn't adapt are the ones sitting on these lists today. But for you, this is an opportunity. When supply piles up and demand softens, the buyer gains leverage. Negotiating power. The ability to walk in with data and walk out with a deal that would have been impossible 2 years ago. The key is knowing which trucks to avoid entirely, and which ones might finally be worth the deal they're offering. Because not every slow-selling truck is a truck to run from. Some of them are genuinely good vehicles caught in a bad market moment. The difference is knowing why they're sitting, and whether that reason affects you. So before you step onto a lot in 2026, ask yourself one question. Are you buying what you actually want? Or are you buying what nobody else does?